Hey, good morning, guys. This is Jimmy, your host for today. This is another trading psychology brought to you by the Birb Nest. How are we guys doing today? Good or not good? Are we making money or are we being right in this moment? So the topic of today is being right or making money. Last week I did a similar live stream. Today I want to approach this subject from a different angle. The main idea about this live stream is that you will learn things, that you will learn new tools, how to control and manage yourself, regulate your emotions, but also to learn and understand, really understand the characteristic of a profitable trader, because there are some key characteristics. A lot of profitable, well-known traders have talked about this topic. So before we're going to kickstart, I will play a video of our sponsors, our partners, and then we immediately start. So hang in there, guys.
PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXPT in minutes.
Ferrum Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit theburbnest.com/Ferrum. Globe is a crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts with Bitcoin collateral. Sign up today at theburbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at theburbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit theburbnest.com/YFDAI.
Yeah, great, guys. Great. So keep your ego in check, fam. Keep your ego in check. I might or might not repeat myself against the previous webinar, but I don't pretty much care, because repetition is the mother of all skill. Today, I want you to understand your ego, your emotions, and how to level up your trading psychology. And I'm being pretty straightforward to you guys. Listening to me, it's good. Tuning in someone's trading psychology webinar, it shows something. It shows that you're taking yourself serious, you're taking your money serious, you're taking psychology serious, and mindset and personal growth. Kudos for that. However, just listening to me, believe it or not, and I think you will believe it, it's not enough. You need to play full out. You need to play full out as if there are no boundaries at all. So play full out, just like a child. This is one of the reasons why little kids, they learn so quickly. They don't see any boundaries. They play full out. They don't care if they feel or not. They just play full out. And I think you guys are special, each and single one of you, listening to this live stream at this moment, or when you're listening to this recording. It doesn't matter. Investing your time to level up yourself, basically, it's a good thing. But you need to play full out, guys. I mean, without playing full out, you will not make much of a change. Let me know, guys. You agree or not agree? By the way, I catch a cold, so I might or might not sound a little bit nasally. Sorry for that. I try my best to pronounce words as crystal clear as possible. So, with that said, being here is 50% of success. The other remaining 50% is, it all depends on you by playing full out. Playing full out, guys. At the end of this live stream, you will do at least one thing that will help you to boost your trading psychology. And believe me, it's not me who can do this for you. You need to play full out. I think I emphasize this more than enough. So just let's start it. Last week, and I love this quote. This quote reminds me. By the way, let me know if you can hear me. Last week I had some issues with my microphone, so I'm kind of paranoid right now. So if you can hear me, let me know if you can hear me. Mark Douglas, and I'm pretty sure most of you know him. He wrote books, 2 books, by the way. I like his book, Trading in the Zone, and there are a lot of videos he did. They're all really accessible on YouTube. So he said, if your goal is to trade like a professional and be a consistent winner, then you must start from the premise. Premise is your foundational belief that you need to believe that the solutions are in your mind. They are in your mind and not in the market. But this also means, guys, if you rephrase this a little bit, most of the problems are also in your mind. And if most of the problems are in your mind, or most of the fallacies and the pitfalls are in your mind, then the solution is also in your mind. And it's a other way of thinking. So how we think determines how we act and how we feel. And it also determines our personality at the end of the day. I have 2 questions, guys. 2 questions. Listen carefully. But before I want to do some form of introduction to this question is, how do you know if you don't or do not trade your beliefs? Because most often we do know that most people, most traders, they don't really trade the markets. No, they trade their premises. They trade their beliefs. They trade what they want to see, and not really the charts or the market. So how do you know that you're not trading your beliefs? I think this is a really important question. And as most of you know, the better the question, the better the answer. So ask you this question, and let me know also in the chat, how do you know that you're not trading your own beliefs? And by the way, guys, I'm pretty sure that most of you know your way to the like button. So give this video a like and let me know, how do you know that you're not trading your beliefs? People with a psychology mindset or a psychology background, or people who are into psychology, they are pretty, they have some knowledge or understanding about emotions. So we do believe that there are 4 or 5 up to 6 core emotions: love, fear, anger, sadness, happiness, surprise, disgust. These are the basic emotions. What I want to tell you guys is, emotions are emotions. They're not good or bad. There are positive emotions and negative emotions. You need to understand this. So let's circle back to my previous question. How do you know that you're not trading your beliefs? Okay, guys. I'm pretty sure most of us are pretty familiar with this psychology of a Bitcoin cycle. But let's call this a psychology of me cycle. Let's imagine it's you. So where are you when it comes to emotion? And then ask yourself, where are you in relation when it comes to emotions in relationship to your own portfolio? Might sound a little bit strange, but which emotion? You can choose one of these emotions or one of these emotions. And try to be as specific as possible. If you're angry, just don't say only "I'm angry," or because angry goes deeper than being angry alone. The better you can express your emotion, the better it is for you, because it gives you a better insight of yourself, about your psyche, about your mindset, and about your current psychology. So Alfie says here, and I totally agree, if you're trading based on a system, a plan, you're not trading your belief. That's true. However, sometimes we do have a system we do have a plan, but still yet we still training our beliefs, because we force sometimes bullish patterns on a really bearish price action situation, if you understand what I mean. So to come back, I think the first question you should ask yourself is, where am I? Actually, every single day, where am I when it comes to emotion, and regarding also my emotion in relationship to the market? Because this gives you a good insight how you feel. A lot of people, they see the market as how they feel, and this is wrong. You need to separate these two. You need to make a good distinguish. So yeah, every day ask yourself, where am I when it comes to me, yourself, in relationship to your portfolio and the market, and where is the market at this moment? This will give you a better insight where the market really is and where you really are, if this makes sense. We just briefly talked about plan. And last time I made this analogy of someone sitting in a car. It's dark, it's raining, it's cloudy, and the lights of his car, they don't work. How likely is it that he will reach his destiny? I don't think he will reach his destiny that easily. He will at least have some severe accidents, especially when he's on the highway. And this analogy is the same as a trader who's trying to make money, but without a plan, without a vision. I mean, without a plan, you don't have a vision. If you don't have a vision, you will perish. It's easy as that. A plan, by the way, guys, it should be a written plan. It's not something, a idea you have in your mind. That's not a plan. When it comes to writing a plan, you are as good as you write. If you don't have a plan, you don't have a vision. If you don't have a vision, you're not sure what you're doing, and you will make the same mistake. I think this is a quote of a neuroscientist I follow, but I'm not sure. He said, if we don't live by a vision of the future, then we will be left with a vision of our past. Meaning, we will repeat the same thoughts, the same actions, the same feelings, and we will get the same what? The same outcome. Does this make sense, guys? So my question to you guys is, who has a plan? Who has a plan? Let me check the questions. Okay, guys. As I said, last week we also talked about this, but today I want to approach this from a different angle. This is Nat Davis. Nat Davis is a successful financial analyst, a trader, investor, an author, co-founder of Nat Davis Research Group, which is a data-driven investment research company based somewhere, I don't know, United States, Florida, if I'm not mistaken. He wrote a book, and he summed up the four characteristics of a profitable trader or investor, and also the 9 key elements. I'm not sure if we can go really through all the 9 key elements, but we will sure talk about the four key elements, the four characteristics. Well, sorry guys, I was too quick. So in his book, he came up with a nice quote. There are two types of investors, be they large or small, those who don't know where the market is headed, and those who don't know that they don't know. Meaning we all don't know, guys. And it's often our ego who wants to know where the market is going. And the matter of fact is, we all don't know. We just all don't know. And we need to understand that it's okay that we don't know. Because from the moment we think we know where the market is headed to, we will make mistakes. We will over leverage. We will deviate from our risk management practice. We will forget about money management. And we will act as if the outcome is certain. However, and Mark Douglas also talks about this many, many times, is each outcome is basically random. There's a lot of randomness in the market. We have a big problem with accepting the fact that the market is random. We don't know, and we need to embrace this, because all the best things, they happen in the unknown and not in the known when it comes to trading. So please tell me, guys, who has entered a trade with a fallacy, with the false belief that he knows where the market is going to? I did, by the way. I did, especially in 2018 and 19. I thought, okay, crypto is booming. I need to buy, and it will go up. This was my premise. This was one of my beliefs, and this is, as you know, a self-limiting or a destructive belief. This is bad, guys. The core conviction you need to have is you don't know, but you should have an edge that works in your favor, and we need to think in multiple scenarios. Because sometimes we think we know because we have been influenced by others, because there are some perma bulls, they're always bullish, or people who are always bearish. Don't fall for that trap. Make sure only good people, people who think in different scenarios, that they influence you. Because once you follow people who are always bearish or bullish, they can cause a lot of doubts and insecurity. You don't want that. Okay, quickly about his own mistakes, and this is self-reflection. We all need to do some form of self-reflection. If you're not successful, or not as successful as your plan or as your initial idea, ask yourself why. Ned Davids, he did that. He made a lot of money, a shitload of money, a lot of money, Ned Davids. But he all gave it back to the market, because we all know 100 winning trades can easily be wiped out by one single bad trade. And his biggest challenge was cutting losses quickly. And he improved this by making a plan. So the whole idea is here, have a plan, because it will help you. It's your guide, it's your friend. See your plan as your trustworthy friend. He will never let you down. Good times or bad times, it doesn't matter. Your plan is always there. And he called this a timing model. The verdict is, have objective models and discipline. Because if you don't have a model, a plan, and if you don't have a discipline, and you cannot trade against the crowd, you will fall victim to herd bias, also known as bandwagon effect. And this means actually that you will rationalize your own action because everyone else is doing this. And this is wrong, because if everyone is doing this, then you basically are part of a overcrowded market. You will most likely make mistakes. I do know we trade with the trend, but if the trend is overly crowded, we see clear signs of exhaustion in the market, then that's actually a good time to leave the market, or to scale out, or take more aggressively profit. Not gonna lie, I made this mistake also in April. I ignored some of my my indicators, and my portfolio, which I have built up since 2018, 19, and 20, witnessed a drawdown. Can happen. Still huge in profit, but maybe I also felt to this herd bias. I'm not sure. Maybe. But you need to stay in the market with an open mind. Keep your eyes open, guys. Yeah, complacency is a big thing, and it's sometimes also difficult to fight. The 4 characteristics, does anyone know? I mean, the 4 elements of a profitable trade. Does anyone know them? Well, it's 1. Objective indicators, because they filter out what? Emotions. Discipline, flexibility. We here talk about flexible to switch from bias, cognitive flexibility. CD5 often talks about it. CD5 is our a clinical psychologist. She has some tools how to train your cognitive flexibility. So we need to learn how to switch from bullish to bearish, or from bullish to neutral, or from neutral to bullish, or from neutral to bearish, or from bearish to neutral. A lot of people, they only think in bearish and bullish, and this is wrong. Most of the time, the price, the asset is not trending, but it's ranging. And when it's ranging, we need a different type of what? Of a strategy. The 4th component is risk management. You know what, guys? Maybe I should share just my screen entirely, because I want you guys to take action, right? And we all agreed that taking action is the only way to success. Wait, I gotta add this. I just quickly make this document. Tell me, guys, about your own indicators you use, or indicators. So what I normally use is RSI. I use this both in a trending market and a ranging market, and I use them differently. In a trending market, I use RSI different than in a trending market. I use RSI to find trends in the RSI. I'm looking for divergence, oversold and overbought areas, especially in a ranging market. And as I said, I use this. I'm not sure if you can see this. Maybe let me know if I should make this bigger. This is, by the way, where the real magic happens. This is now thinking. This is thinking how you can level up. So I use RSI. It filters out some emotions. It helps. It gives me a good understanding of the market, of momentum. It's a momentum indicator. It tells something about the price rate. And I use this differently in a ranging market than in a trending market. Let's say that my mastery level is 60. So what do I need to do to go to a mastery level of 80? So ask yourself this question. And ask yourself the question, for example, connect, if you use RSI, Bollinger Bands, and MACD, is where is your mastery level at this moment, and how do you know this? How do you know this? My suggestion is find a RSI master, or a algo master, or a Bollinger Band master, or a MACD master. Find someone who really mastered this, copy this, tweak this. You don't need to do exactly what he does or she, but you need to make it your own indicator, if you understand what I mean. Practice, chart on TradingView, back test, forward test. This is what we do if we want to excel and if we want to grow. If you don't want to grow, do the same things, have the same thoughts, have the same outcome, but don't expect that you will excel and that you will grow in trading. Fact is, you will stagnate if you do the same things over and over again. So I think this is something you could do after this live stream. Ask yourself, what's my current mastery level, and how do I know this? What's my desired mastery level, and what will it bring me? Find someone who can help you to master this. It could be a training buddy. It could be within the Burp Nest or a book. I don't care as long if you're working on this. Copy, tweak it, practice, 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 because repetition is the mother of all skill. Chart, backtest, forward test. Okay, guys? I use RSI. It's my favorite indicator. I also use EMAs and MAs, especially in a trading market. And I use Burbicator Pro both in a trending market as in a ranging market. These are my objective indicators. You all need to have them and also have a plan how you use them. For example, I use them, to draw trend lines, divergence, oversold and overbought. You also need to have this understanding of how you want to use your favorite indicator. So, and ask yourself, am I here to stay the same, or am I here to level up my trading performance? Okay, guys. Then we have discipline. Discipline is a limited resource. We don't have discipline, in such a way that we can not run out of discipline. Matter of fact is, at the end of the day, most of the time, you're totally run out of discipline, or you're not that strong in discipline anymore as in the morning, and then you will most likely make mistake. But wait, what is self-discipline? What is self-discipline? I often talked about this. Self-discipline is all about doing the right things, about showing the good behavior. So when it comes to trading, setting a stop loss is good behavior. Imagine if you stand up in the morning, you have a lot of things to do, and a average person has around or up to 60,000 thoughts a day, consciously and subconsciously. All these thoughts will create will consume some energy, will consume some willpower, will cause some emotions, will cause also some behavior. This will cause you to run out of willpower. Discipline and willpower are pretty much connected with each other. So imagine that you run out of discipline and you want to take trades. Believe me, if you're out of discipline, you will make, if you're not careful, you're more likely to make mistakes than when your discipline power is fully charged, if this makes sense. So what I want to say is here, one, your discipline power is limited. It's not unlimited. Everyone who's telling you my discipline is unlimited, he's lying. He doesn't even know what discipline really is. Secondly, understand your discipline leakers. Some events can happen and then they can suck out all of your discipline power. It could be a fight with someone. It could be the market, or it could be an internal or external thing. Lack of sleep, if you're sleep deprived, or when you ate too much, or I don't know. And there are a lot of things that can cause you to leak a lot of discipline power. Does this make sense, guys? And then flexible. We need to practice flexibility in the market. I know a lot of people, they are bearish, while the market is still neutral bullish. I know this could be a difference of opinion, but what I've witnessed is people, they stuck in their own bias. And they will find all the possible reasons to defend their bias. So what they do is when a market turns from bullish into bearish, they will force bullish patterns on the charts to justify their directional bias. A good trader immediately divorces from his bias. You need to have a plan. For me, example, if we close below 30K on a weekly level, we see two candles closing below 30K. I'm just out. or a few days even, I'm just out. I'm just gonna cash everything in until there's more clarity. And I don't know, and I don't care if the market then goes up or down. I just wait for more clarity. This is flexible, guys. You need to stay flexible. And ask yourself also, when are you going to cash out? There's also a good question you need to ask yourself. When are you going to cash out? When does the bear market happens according to you, your analysis or your research? I think his name is Ned Davis, unless I made a sorry, my mistake. Ned Davis. Ned Davis. A good question. His name is Ned Davis, not Davids, but Davis. I made here an error. And risk management, guys. So what I want you guys to do is to rate yourself. All these four elements. Your objective indicator. How good, how happy or satisfied are you with your objective indicators? Give it a rate. Is it 50%, 60%, 70%? Ask yourself also, how is it now with my discipline? Am I happy with my discipline power? Give it a rate. Also, your flexibility, your directional bias, your ability to switch from bias, rate this as well, and your risk management. And then ask yourself, where can I make the quick wins? Let's say, for example, your indicator is let's say 50%, and then you have your discipline, which is 60%, which is maybe not that bad, right? Flexible, which is now, let's say, they can be arbitrage numbers. It's just like what you think at that moment. And risk management. Imagine I'm someone who's making a lot of risk management mistakes, and it's 40%. It's not that good. So then I need to be objective and ask myself, okay, where can I make a quick win? Is it risk management? Okay, it's risk management. And then come up with a plan. A plan is reduce position size until I'm more profitable, for example. So then my risk per trade is lower than normally. Or indicator. I'm not that happy, so I'm gonna try out new indicators. So this is what I mean, guys. You need to play full out. Does this make sense, guys? So my question, or the question you need to ask yourself, and I'm also asking you, what are you going to do, guys? So where do you think you can make make the quickest win? Is it in objective indicators, discipline, flexible, or risk management? Which of these four key elements? Someone? Okay, guys, something about NLP. So I'm approaching his work also from a NLP point of view. This is a basic communication model from NLP. We tap into this into this world through our five senses, and what we automatically do is we delete, generalize, and distort information automatically. And I want you to focus on the right side of this model. So we generalize, distort, and delete information. This is why it's so difficult to switch from bias, because a bias is actually a belief you have, maybe also enforced by some certain memories. And flexible is one of the four key elements. So a lot of people, we have also seen this, by the way, in 2017 and 18, is people, they couldn't divorce themselves from the directional bias. It was 20K, it dropped down to 16K. People saw this is just temporarily. Then it went down to 12K. It will go up, and then people, they remained bullish while the market was bearish. You don't want to stay in this state, so you need to break this state. You want to learn um, how to stay objective, so you can allow yourself to stay flexible. Does this make sense? And by the way, Alessio, I do think that discipline is one of the easiest to work on, especially if you understand your discipline leakers, where it comes from, and you're working on it. I'm pretty sure you will get stronger and better in discipline. And if it is all of them, please try to make a priority. It is like one of the four first. Guys, I think we talked enough about trading psychology for today. Next week, what I want to do is talk about the 4 or the 9 rules when building a plan or a trading methodology. Shall we do that, guys? Shall we continue next week? Because I respect your time. I'm trying to keep these trading webinars pretty short, because the shorter the better, and the more I talk, the more difficult it is to take real action. And honestly, I don't care how many people are listening to me. What I do care is that people are taking action. People need to take action. So what are you going to do based on this information I shared with you today? So what I shared was, analyze yourself first and understand how you feel in relationship to your own portfolio and trading performance. If you do this, you will most likely, and you understand this, you will most likely not trade your beliefs, but the charts. That's one. So make sure you understand this and try to be specific with your emotion. If it is angry, what form of anger is it? Are you frustrated, offended? Are you mad? Are you annoyed by the market? Make sure you understand this, and then understand where the market is, and check if there's any difference between how you feel and where the market is. This is something, this should become a routine, something you do naturally. Think about the plan, please, guys. I mean, without the vision, you will perish. It's easy as that. Otherwise you will make the same mistake. And then check this out, guys. The 4 key elements: objective indicators, discipline, flexible, risk management, and write them down. Please write them down. Write down your current level, your desired level, and how you know, and how do you know about your current level. And find someone who can help you. If you're in the Birb Nest, you can ask people, find a trading buddy, read books, and this you can apply for 4 of these 4 key elements. So please take action. And without action, you just have wasted 39 minutes of your precious time, and I think that would be a shame. And if you really want to stand out from the crowd, from crypto Twitter, from all these other noise traders, then take action. And believe me, sooner or later, you will make a tremendous, a significant progress. I'm sure about that. You will make progress. So guys, are there any questions? So yeah, I know it's a lot of information, so I will just stick with 1 or 2 things you want to do. Me personally, what I just shared about your emotions. How do you feel in relationship to your portfolio? Try to understand that and try not to reflect that on the market. Secondly, understand the four key elements and make a plan. A plan shouldn't be really detailed, but be specific. If you do this, I swear you will make progress. Yeah, the charts. Let's check quickly the charts. What do you want me to check, Lars? So let's do quickly Bitcoin. Um, Honestly, I'm not here too bullish or bearish. We're just trading in this range here. I know it's a huge range, but still it's a range. I'm not too bullish, not too bearish. High time frame thesis is if we close here, if it really nukes, we see here a bearish retest, then I want to be out. Honestly, I want to be out. It's a possible scenario, by the way, guys. We need to stay flexible. We are neutral. However, I use the Birb Pro, which is an indicator created by Signify in the Birb Nest. And we see here that it signaled here a trend change, and it works based on different, it works on a script and different trading tools. So we've seen here a trend change. This is a trend change. We also that Bitcoin didn't close below this level. So it didn't really make a lower low. In fact, it was here making a higher low, which is good, right? What the Birb Pro also tells me is at this level, you see here some dots. That's the BFU. It can act as a dynamic resistance level. So this is my high time frame picture I have. I'm not trying to be bullish or bearish, just neutral, and I think it's okay. This, as you can see, this is the 1 hour time frame. You can see different things. You can talk about the inverse head and shoulder, but I do not take that really that serious on an hourly, how do you call that? An hourly chart. Would take it maybe more serious on a 4 hour chart. But no, it's not significant for me. We do see that this level, this gray box, act previously as a resistance. And the general rule is resistance turns into support. We see some form of consolidation and a bullish divergence, as you can see here. And here, the Birb Pro is telling me that this is a 82% bullish divergence. Maybe you see the wicks, but it does calculate divergence based. This is just for visual, but it does use the closing prices. And it seems that there is some momentum, bullish momentum. And as long as we stay here, I do think that the higher probability is that we go up, at least here, to 38 or 39. But there's also a scenario where this bullish divergence gets invalidated and we close below, we make this bearish retest. That goes down, we revisit this area again and then go down. So yeah, I just played the ranges. I'm just here neutral. If I see some strength, I will long Bitcoin. Just a scalp. not doing any high time frame trades at this moment, unless there's more clarity in the market. This is how I'm playing the game. Is this enough for you, Lars? And what I also want to see is that Bitcoin is trading above this baseline. We call this the baseline. This is the Birb baseline. It acts like a moving average, but it's different than a moving average. You can use it as dynamic support resistance, as a, or I'm using it as resistance often. So it has been rejected here. You have this fake out, or rejected. It made attempt to close above this baseline, but again rejected, but we're still on support. So yeah, I do not short support unless we make a bearish retest, or we go up and RSI crawls up, and then I will open a long position. But just a scalp, It's quick in, quick out. Okay, guys, thank you very much. Hope to see you guys maybe the next time. And if you are not a member of the Nest, I definitely encourage you guys to try it out. We do give a free trial, 7 days. We do this because we truly believe in our approach, our educational system, in our community. So I would say give it a try, because you will get every day a daily live stream, calls, educational content. We have a psychologist. You guys have me, NLP coach. You guys have Birb. You can see what we're trading and what we're not trading, and what we're doing in this current market. So I would say give it a try. Go to the Birb Nest, and yeah, why not? Just try it. It can never do you any harm. Okay, guys, I wish you a fantastic Friday. And next week, we're going to talk about the 9 characteristics, or how the 9, which word he used again? Yeah, the 9 rules to build a timing model. And you can use these 9 rules to build your own plan. So guys, see you next week. Bye for now. Yeah, we'll share. Well, this is the link. And yeah, you really need to be careful for scammers. Not sure if you guys heard about Ledger. They're scammers, and they sending fake ledgers to people who have been hacked. It's really terrible. So this is the website. You can sign up for free, really free, no string attached. I mean, after 7 days, we kick you out. No hard feelings, but that's how it was programmed. It's really free. You will get access to basically to all our premium content. Thank you very much, guys. Hope to see you next week. Bye for now. Wait, yeah, you got emails and messages and phone calls. Wow, that's really scary, to be honest. Even phone calls. That's not nice. Yeah, their new tactic is that they're sending out ledgers and asking people to fill in their seed phrase. And this is also really next level. I mean, imagine you receiving a ledger, and they really it's really a real ledger they're sending you. It's they're so sophisticated, man, the scammers. It's insane. I don't have any words for it. Yeah, you're waiting for it. I just hope that they don't send you any fake ledger, to be honest. Okay, guys, I hope to see you guys next week. Then we will talk more about the timing model. Bye.